Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, copper, and Bitcoin. Today, I have a great show for you. I have got Bill Downey from Gold Trends Net, and we're going to talk about the short and the longer term outlook for gold. It's going to be fantastic and sparkly, hopefully. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading those CME Group event contracts. That's what we're all using at Place Your Trades. So first, I'm just going to give you a really quick overview of the market. If you were trading this morning, you saw small caps are like on fire, whereas there's a little bit less strength in both ES or S&P futures as well as RTY or small caps. So is that trend going to continue today? Are we going to continue with rotation? Do you think that you know where the market might close, whether it's higher or lower from here? If you do, let me just show you here. I am going to share my screen here. And the first thing I did this morning is I went to the Place Your Trades website and I looked at these daily gap stats. It's inside of the dashboard. All you have to do is register. It's free. And these are just some tools that come so I can actually see the probability of each of the indices and whether or not they are going to close higher than they opened. So you can see the Dow, according to these quant stats, is the most bullish, then the NASDAQ and the Russell and the ES or S&P 500. So, you know, you can look at both for the indices, you can look at energy. It looks like actually crude oil, I think, has the best stats today. 55, anything over 55% is fantastic. Anything over 1.3 profit factor is fantastic. Look at that. It has both. So it looks like crude might have a bullish day today over where it started. And then natural gas, a little more, yeah, you know how natural gas is. And then also there is the metals. So we can look at gold, which is 58%. That's not bad. Not bad at all. Profit factor isn't quite 1.3, but not horrible. Copper and then silver. So if you think you know where they're going to close and you have an idea of whether it'll close higher or lower, I'm going to show you the Tradeovate web interface, or well, this is like what would be on your phone. It's a little bit bigger here, or, you know, so it's hard to see, but you can basically get an overview of all of the indices, what's happening for the day. You can see oil did some things this morning, but it's looking like it's trying to head up, right? From where? Nope, it's trying. Gold, we're pulling back a little bit so far. And so you can basically click here, and then you have the choice if you want to sort of buy daily options without having to get all of that leverage associated with futures. You can select them there. Okay, so that's enough of that. Let's talk to Bill. So hi, Bill.
How are you, Julia?
I'm very well, thank you. Thank you for joining me today. I appreciate it.
I appreciate you having me on.
Yeah, no, I think this is a perfect timing because it's one of those times. It's like, you know, sometimes the metals tease us, and sorry about that. Sometimes the metals tease us, and it's like, is this the time? Is it not the time? So, I mean, recently I happened to catch a near low on silver. So the question is whether or not, you know, we start to consolidate and it goes up, or whether or not we might go down. So, let's go ahead and share your slides here. Okay. So you sent me some charts before we started today. What are we looking at here in slide number 1?
Well, first off, we're looking at the seasonal chart. It's a 40-year chart on gold that does the average price patterns over those 40 years. So while it's not a guaranteed one-year thing, the thing is about markets is that there are no absolutes in markets, but there are odds. And the odds favor that gold this year is following the seasonal. And when it usually does, there's a great chance that the second half of the year is one where we have a good size rally. if you look at the top portion of the chart, I've kind of done a switched in gold chart of this year's action. And you can see that so far this year, it's followed the seasonal very well. We had a low in March. We usually don't get a higher high, and that is the one difference we've seen this year, where we had a pop going into April and then May. But as you can see, it's been choppy pretty much since that time. And recently in July, we've pulled into the lower portion of the trading range this year since the March low, which, by the way, at that 1800 level was pretty much the 2022 closing price. In any event, there are two things to look for in the seasonal. When the seasonal is following, it usually makes a July low and a fourth quarter high. There are times when the seasonal is contra-seasonal, and when you see a summer high, that's when we often go back and make lows, if you will, in July. I mean, excuse me, in December. So when we see summer lows, the odds favor the highs will come in the fourth quarter. The opposite is true when we see summer lows, and you can kind of look back at that on yourself, and you'll see that that plays out pretty well. I look at the seasonals a lot because mining companies and commercial interests look at this chart as well. So what's it telling us? Well, so far it's brought us down into a July low, and the "you are here" picture is the recent rally we've seen from the bounce from around the 1900 area, and we're right in mid-July right now. And usually there is one more bump lower. I say usually, but it's not always. It could very well rally from here, and it does not have to take that second dip. However, it's one that we should be aware of, especially if you're trading. If you're an investor, July is a great time of the year to buy when it's making a low. The last 3 months, and I'm not really sure the whys it gets stronger, but there's certainly a lot of Christmas products that come online, and there's certainly a lot of celebrations in India where gold is a favored gift, if you will. With that said, the other side of the coin is the choppy direction, and usually summer lows usually come in because the mining companies are generating income for their mining purposes. And so that's kind of my take on what happens with the seasonals and how they're affected. And so this year, we're making a low just at the right time here in July. Does it ever go past July? It does. Once in a while, we'll see the dips come in late August or early September. But on average, they're usually a bit higher than the July lows. So it's our favorite point in time for taking some trades if you're bullish, and especially if you're an investor. If you're an investor, this time of the year right now would be the time I would be adding some. And just for the record, I did add some over the last week and a half on my physical holdings. I think you should have both. I'm not hearing you.
Oh, sorry about that. So I was wondering, where can folks? I mean, I know where to buy the futures. Where do folks buy physical metals?
Well, for myself, I mean, there's plenty of places online where you can get it, but I live in rural Canada. There's a coin shop about 50 miles from me. I usually take a ride a couple times a year. If we're making July lows, I'm usually buying some in July. if we're making July highs, I usually wait till the end of the year to add, and I try to add 3 or 4% every year to my holdings. The thing that I found is trading futures, you're using leverage. It's an emotional play. I like to look at both sides, and I do trade, uh, but I do buy physical, and I've been buying physical since 2015. I was never a physical buyer, but after years of trading the market, some years you have winning years, some years you have losing. It's good to accumulate physical gold for a couple of reasons. If the internet is ever shut down, you're going to be holding gold, and you're not going to have access to a lot of stuff. And gold in its own, when we look at its component, the central banks own 10% of their assets. And they do that for insurance purposes, in case of perhaps a Mad Max event, if you will. And I guess a couple of years ago, if you really looked at saying that a Mad Max event is coming, it probably would be dismissed. But I implore you to look around. And while we're certainly not at a Mad Max event, when truth becomes shunned and lies become the narrative, and when you look around what's going and coming at us, I don't think we can eliminate those possibilities. So from that respect, gold is something that you should own physically and not just trade.
Well, can I ask? I mean, recently I have heard about the BRICS countries forming their own currency, and then there is a rumor, and it really is just a rumor, that they would back that currency off of gold. Have you heard that, and what do you think about that?
I have heard it, and I've done some reading on it. The thing that I would emphasize the most is what really gives power to the US dollar is its global bond market, the ability to borrow. And unless the BRICS currency has a bond market, that I think that I don't know the future, but I think the odds do not favor that unless they can come up with a global bond market where you can borrow. That's the big game that's been in the world. As a matter of fact, I think they took gold off the standard for the simple fact that they didn't have enough money to go to war with anymore. And for Russia to go gold, they're going to pay for the war in gold. It's going to be a lot more expensive than paper dollars. So I don't dismiss the BRICS situation. This whole thing started when SWIFT, the global money machine, when Russia was removed from SWIFT, a lot of the global nations have looked at that and said, can we really afford to be on the wrong side of the United States? And so I think the most important thing to watch for in the BRICS development is, will they have a bond market?
Okay, so and I'm not one to sort of say what people should and shouldn't have in their portfolios, but I know for myself, I don't mind having a certain portion of my portfolio in metals, just in the event of something like this. I think it is nice insurance. But let's go ahead and go to the next slide here.
This is kind of my short-term chart that I'm showing you, even though it shows the whole year. There's been some key levels that we've stayed with, and if you do come visit me on Twitter, you'll see that we've been using these numbers all year. First off, let's go right to the top where I have 2072 to 2082. That area has been tested a couple of times, and it is proven to be resistance. And until we get above that area, and 2145 to 2172, which is the yearly resistance. I think that it's going to be a tough number. As far as the shorter term, the yearly support number is 1802 to 1822 that we tested. I believe it was last March, but don't quote me on that. It may have been late last year. With that said, the 1900 area and 1922. 1922 has been my key number. It's the 2011 high. And this pullback that we've had since May has come back, tested that area in 1922. We broke to it. We broke just below 1900, but then came back up into that zone. And then last week, the CPI report took out the downtrend line from 2023, as well as 1922, and we've closed back above that on a weekly basis. Therefore, while it's possible to get that second dip in July that was on the chart that I showed you earlier, the seasonal, as long as we remain above 1922 on a Friday close, I'm bullish short term.
So you know what's interesting? I'm just looking at my own chart here, and I have a very similar outlook to you. I have 1926.1 as important. Yeah, so that makes me feel good, right? Because I am not a metals expert per se. I just look at charts. But the thing that I see that is really exciting from my perspective about the charts right now, and it could go either way, of course, always, right? But it looks to me like the weekly gold chart is potentially bull flagging.
Yes.
Yeah.
Yes. And there's even, if you can see here, it looks like we've got an inverse head and shoulder here at the 1900 area.
Yeah.
Where 1922 to 1932 has been that neckline, and interestingly enough, it has exceeded that area right as we crossed through the 2023 downtrend. Now we've got some resistance that we came upon last week on one of my momentum lines near 1965.
Yeah.
And the key now is if we do get a dip in July and we go back and test that 1922 area and that 2023 downtrend line, I think that's going to provide us some good support at that area. Can we take out the July? We can take it out. But I think the odds are favoring that the 1922 area, 1900 to 1922 is going to be some strong support going forward.
Yeah.
The other thing I would look at is our ability to get back above 1972 to 1982. If you look over earlier, there's 3 big sells that took place in the March area, just above 1985. There's got to be a lot of stops above that area at this point in time. So I think that if we got above there, we could rally strong. 2000 will obviously be a number that the feds and everybody else will be watching. But I think getting above 1985, 1986 is going to provide some power to the upside.
Okay, that makes me feel good again, because my pivot for a gold close above the weekly, which would be a major breakout, would be 1973.3. If the gold weekly chart closes above 1973.3, that is a breakout of the bull flag. It's a breakout above the 20 EMA on the weekly. Is a breakout.
What I like, Julia, is we're coming up with the same number with different ways of coming up with the number, and that always is a good sign for me.
Yeah, me too. I mean, I am amazed whenever anybody has like similar numbers, because I'm so weird in the way that I do things, and I like the way that you do things too, because it does seem just different and right according. It lines up with me. So let's look at the monthly chart here.
Okay, on this monthly, you can see this is what I call the 21st century central bank bull bear line. That in 1922. The Three times we've come across and above 2000. And I think that the central banks, certainly in the past, they have not been interested in seeing gold above that price. You can see we made those highs right around, if you go to the left of the chart, way back in 2011. We had that big rally uh, throughout the first decade of this century, brought us all the way up to that 2000 level. And then um, we actually traversed all the way back into 2015, back to 1000, just above it a little bit. I think the number was around 1040. Then we had another big rally going into 2019. We've hit this 2000 area three different times. Now, the one thing I want to point out on this chart is the low last year broke below 1682, and that's what I call a break of structure. It's just something that I've studied from other chartists, and I find it to be very important. What that break of structure means is that in order for us to go full out long-term bullish and have a new wave to the upside taking place, is we must get above 2172 to 2200. That on a monthly basis, a close above that, and I think that we're on our way to the next wave, going higher, similar to the one that we saw in from 2005 to 2000.
Wow, that's major. I mean, for me, I would call that a fakey breaky when it broke that structure. Whenever I see support broken and then regained like that, it's usually good for at least whatever time frame you're looking at least a few more bars at the very least, because fakey breakies are super. If it's a fake breakdown, it's a super bullish, and vice versa if it's a fake break upwards.
You bring out a great point, and to add to that point, because I totally agree with what you're saying, is once we broke back above 1682, we made up about 5 months of price action just in that 1 month.
Yeah.
And not only that, ran right back up to 2000 within 3 months. From there, what did we do? We sold off, okay, back down to around 1822. And the 1822 area is the 2022 closing price. I think it was 1828, somewhere around there, but don't quote me. It's within 10 or 20 bucks of that 1822 area. We came down, tested that, and then the following month we reversed and we closed back above 1922. So with what you said there, a flush out is what I call it. We all have our little names for it. So
Yeah.
your point is very well taken, and it could very well have been the point where the commercial and central banks dumped a lot of liquidity, a lot of longs capitulated there, and that's what the banks need in order to control prices, is to be able to be on the other side of the market.
And the other thing I wanted to mention is when I see a triple top like that, I call it triple top, not a top. It doesn't mean that it won't come down from there and do all sorts of weird things underneath. But for me, when I see a double top, it could be a double top, absolutely. But for me, a triple top simply means it's resistance, not a top. So I call it triple top, not a top, because generally speaking, I don't find that triple tops hold all that well. And also, the high so far, I believe this year, has been outside of U.S. Trading hours. It was on a spike at this on the 6 p.m. candle when the market opened. So I think we're going to hit those highs at some point this year again and more. That's what I think. But okay, just my opinion. Just my opinion.
Totally agree with you. Triple tops. There are sometimes quadruple tops, and I've even seen five. But once you get to three, the odds begin to favor that whoever's holding prices there are in trouble, and that the other side of the market is starting to take form. if we go to our last chart, I can really talk about that. Okay, it's not the last chart. We have one more. This is the 21st century bull market channel line. And you can see 1,000 and 2,000 has formed the classic cup and handle. It's been an area that gold has spent 10 years in. And with a triple top here at 2,000, you can really see that we're still playing inside where the highs of 2011 and 2012 took place, that were kind of ranging in there, slightly above, coming down to that 1900 area, and then, and again, so far 1922 has held over the last few months. And so, as long as we're in this this channel, and this is where I find my resistance being near the 2200 level. It's possible that we get capped at that area this year. That would be my best take for where we're going on a breakout from above 2000. What we really have to do is we have to make 2000 support and not resistance anymore, just like we did with 1000.
Gotcha. Okay.
Now, here's the chart that we're just building. If we look down, this is where the bull market actually began in 1999, around that $250 area. You can see that we had that massive rally up to 1,000 going into 2008. And then we had that financial crash of 2008, where gold actually retraced back down to 681, just about the point of the 2005 highs. And again, there we had a reversal. And if you look at that 1,000 area, we had three major tests. We had a triple top there at 1,000. 8 months later, it broke out, cleared 1,000. And when it did, it ran up to 2,000 in a very short amount of time when we look at long-term pictures. We did come back to 1,000, and that can be a little scary, I guess, when you think about it. But this 10-year range, what's now happened with this cup and handle is we've now gone back to 2,000. We've knocked on the door 3 times, just like we did at 1,000. And while there are no absolutes, I think at some point in time during the second half of this year or early next year, we move above this gold line that I've got. And the next move should be one that takes us to $3,000 or $4,000.
Wow. I mean, it certainly looks possible based on this chart. And it looks like it's what I call a piecewise analogous segment. Some people call them fractals. I'm being fancy right now, but it looks like if I were to take a box here and cut out that first time it knocked 3 times and then paste it right on top of this second time, they look like very, very similar structures. Doesn't mean history will repeat itself. It does tend to rhyme, but that looks very exciting, I think, for gold bulls.
Absolutely, Julia. We're 100% in agreement again. Gann himself said, if you want to know the future, look at the past on these prices. And my take is that there's a similar line, that this rally that took us from 1,000 to 2,000, or to 1922, if you will, once we broke out. I think if you just copied that and pasted it over at 2,000, I think that's the best take of what we're going to see. So I'm either looking for it to move to 3,000 or possibly double to 4,000. And I know that those sound like ludicrous numbers right now. They always do when we talk about the future. And there certainly are no absolutes. There are only odds. But once we break above 2,200, I think that's where the public comes in. And when that occurs, we have to keep in mind, people talk about Bitcoin having, I forget how many coins there are, but there's a set amount. Well, if every person on Earth bought gold there would be enough for only 1 ounce of gold per person above ground supply. So it's not like gold is in huge supply. It sounds like it's in huge supply until you consider that only 1 ounce per person on Earth exists since gold has been mined. So I think the key thing here is to look at this area, look at what happened at 1,000, and just to keep focused when we're above 2,000. If we get above 2,200, I think that's where the central banks and their short positions are going to be in good trouble.
I love it. I love it. And you know what I really like about your analysis, Bill, is that even though it does sound aggressive, and it is aggressive, but if we were to have chopped off the chart right at the first time it did the triple top at the 1,000s, people would have said, okay, that's crazy to think it could go higher, because look how beautiful, how parabolic it must have looked then. And the truth is, things that are crazy always, tend to get crazier.
Absolutely.
That's just how it works. That's how Bitcoin got so high at one point, right? Is it got crazier and crazier. But and I also like the fact that there are, on a dip, if it doesn't hold this, well then okay, this is not the time for gold. So I like the fact that you have both support that needs to hold, as well as a resistance that once it gets taken out will be a breakout. So I'm not getting the vibe that, because there are certain analysts that I follow that are, I just can't even listen to them all the time, because they're consistently bullish or bearish, by the way, or bearish. But I really like this analysis that you've given, because I think that it's fair. It seems to me to be technically balanced. So I really like it.
Yeah, and like I said, Julia, I enjoy looking at your charts too, and I like how we come up with the same areas using different tactics with it. I've seen your oil charts and your other charts, and I follow them closely too, because they seem to match up with what we have. So to conclude, in the short term, July lows are usually what happens. Keep an eye on 1922. If the weekly closes above 1922, you should favor the bulls. Weekly closes below 1922, you can favor the short-term bears. But that 1922 to 1932 area is an area that's been around since 2011. And the reason that I am so bullish is basically because of the events that I'm seeing. And this is a 10-year range, okay? 12, 13-year range. Once you break out of a range like that, the odds favor heavily that we're going much higher. And I know it's been a long wait for the bulls as far as the long term goes, but I think they're going to be rewarded very shortly this time. And you can check back on my Twitter. I've never been a perma bear or a perma bull. I try to follow the markets. And right now, gold is telling me to get ready to watch this area, 2,000 to 2,200. If it gets above there, she's going to fly.
Fantastic. So everybody, this is Bill Downey. He's at Gold Trends Net. If you'd like to follow him on Twitter, I think he's an excellent follow. He's somebody who, when I posted my recent, silver is starting to look ugly hot, when it was pretty close to the recent bottom, he's somebody who, when he responded to me and shared the seasonal charts and shared his research with me, it gave me, more confidence that maybe I might be correct. So I would say he's a very good follow. And if you'd like to follow at Place Your Trades on Twitter as well, that'd be fantastic. I'm Cordova Trades, and I hope you've enjoyed this. And we're going to see if we can make this available for download, potentially off of our site. If you'd like to see those charts, I will see if we can do that for us. And I wish you a wonderful trading day, everybody. Bye. Thank you.
Thank you, Julia.